Hello, everyone. Hope you had a nice Easter holiday weekend. Stocks came back from the holiday, basically consolidating the recent gain still. The NASDAQ pulled back 0.14%. The S&P 500 closed slightly up at 0.05%. The Dow Jones Industrial Average slightly up 0.10%. 11%, excuse me, and the Russell 2000 up slightly 0.06%. The volume was lower across the board today, and with the flat market and the overall pullback in the NASDAQ, I have to say that today is a constructive consolidation session, especially considering on an end-of-day basis we only had two sell signals. One is BITA. It's a soft sell signals. It's closing below the 20-day moving average without producing any significant gains. I've now raised my first sell stop to 23.81 and have lowered actually my final sell stop from 24.08 or 23.44 on the position all the way down to 23.01 on the final half of it, since I can get out a little bit early here if it moves below 23.81. So 23.81 first sell stop now with it moving below the 20-day moving average, and 23.01 final sell stop if BITA does not work. And then sticking with the Chinese names, XRS actually failed today, slicing through both of my sell stop levels. My first sell stop level was back here at 50.03. Final sell stop was 48.21. As you can see, cut through both of them. Volume is slightly below average, but it's still higher than what we've seen lately, and that's actually like 1, 2, 3, 4, 5, 6 straight days of selling off. So XRS has failed, so we'll cut our losses on that. But besides those two, everything's holding up fine. And before we actually get to the new longs, I want to just show, there's quite a few stocks once again that I flagged. They're not necessarily great, but excellent right-sided patterns forming. KTOV, very nice today. GSBD, pocket pivot point signal off the lows. It's a Goldman Sachs BDC real estate mortgage investment. ATSG following through on their gains back on March 9th following the Amazon news, contract winner. ZX, a Chinese auto stock, continues to see accumulation in it. EBR, Brazil utility stock, another pocket pivot point signal. We should still be long this name, but got shaken out a little too tight with my stops, a little too careless overall, but if we were still long, we'd have a 24% gain now in a little over a month. But it's a volatile market. I'm going to make these mistakes, and so will you. It's just how it's going to be as long as we stay volatile. That's why MSG. Look at MSG come back. So technically, MSG we should still be long, but instead we have to wait for another long signal. Kate Spade and Company produced a pocket pivot point signal today. As you can see, it's working on a right side consolidation pattern. Another nice move though. BSFT is working on a right side. DLA, another long signal. And I got a long signal back here on the 18th. Got one on Friday on the 24th. Got one today, but the stock just does not trade enough average daily volume for me to be interested. I mean, when it first showed up, DLA was only averaging right around 15,000 shares, and I think we've gotten it up to about where it averages right around 15,000, 20,000 shares. That's just too thin for me on a daily basis. But as you can see, at least there's some names out there. MRCY follow through on its good price gains on Friday. SPIL followed through on its strong Friday gains, and TiVo followed through on its strong Friday gains. So it's nice to see stocks act like that immediately following some big gains. Now today we actually have 3 new long positions, higher quality. None of them are great though. Can't load up on any one, but have to respect the amount of signals. First one I'll go over is the best one, I guess, overall. It's Ruth's Hospitality Group. This is Ruth Chris Steakhouse, basically, producing another pocket pivot point signal since the February lows. It's its 4th one since then. Appears ready to be breaking out, pulled back a little bit from the intraday highs, but hopefully that will just now lessen how much risk we have to take before we know we're wrong. So my limit order is going to stay at 17.94 because Ruth Chris is a CanSim quality long. Remember, it's kind of a weak buy signal we're under since there's no accumulation. So it gets 2% for being CanSim quality. It was in one of my BOP scans that looks for a green BOP over the past 20 days. Made it there. Made my new 52-week highs on above average volume scan, and made my price volume BOP surge scan. So finally got a 5%er. CanSlim 2, BOP 1, new highs 1, price volume BOP 1, total of a 5% long position. But since we won't know we're wrong on the entire position until it moves all the way back to 1684, I'm going to tier it into threes. First cut loss 1753, Second cut loss 1734, and then we'll let the rest ride at 1684. So I'll do it in thirds with Ruth, and I assume if it fails 1753 and 1734, we'll have a new low that'll be higher than the 1784. So once again, I doubt 1684 comes into play. But Ruth is one of our higher quality long signals in a long time. You can see long-term uptrend. Not the greatest breakout because the 50-day moving average and 200-day moving average isn't right on the price, but you know there's the 20 and 10-day moving averages, and the 10-day moving average is above the 20. So that's what I always like to see. So that is a good sign. Then Dollar General breaking out of a cup or a saucer with high handle pattern. Very short handle, might be too short. You can see the 250 is a little far away. You can see while it's touching the 10-day moving average, it's not touching the 20-day moving average. So the good news is we don't risk a lot, so I can go ahead and keep it the normal position size, 2% for being in the CanSlim scan. It was also in the new 52-week high scan on above average volume. First sell stop's 84.13. Final sell stop is 83.36. Obviously at 86, that means that we don't risk much more than about 4% on total, less than 4% total on the entire position if we're wrong. Got to take it with an uptrending market, especially since we're in the historically seasonally bullish period, March to May. So got to take the long signals when they're canceling. And then a kind of quasi CanSlim long signal, HBP. We attempted to get long this stock. I think it was back here, somewhere back here, but we got shaken out in November. It wouldn't have mattered because we would have gotten shaken out in January anyway. But it gapped back above the 50 and 200-day moving average back in February. It had a pocket pivot point signal a few sessions ago and has another one today with a significant surge in BOP following yesterday's already increase in BOP. So you got 2 days of BOP increasing after it fell from being max green. So strong volume, strong BOP move, pocket pivot point signal, and breaking out to new highs. HBP was not necessarily new 52-week highs, but new closing highs here at 383. See back here is at 381. So we got a fresh breakout. So HBP was in my CanSlim scan. It was also confirmed in my green BOP for at least 20 days scan. However, since it's a below $10 stock, very thin, just going to keep it 2%, 1% for being CanSlim, and 1% for being in the BOP scan. You could also look at it. You could also do 2% for being a CanSlim, and then just for it being confirmed in the BOP scan, you can go ahead and take it as a CanSlim quality long signal. But I would not increase my personal position size above 2% on this name because it's thin, but it's a leader. It actually has a 99 earnings per share ranking. Let's see if I can go ahead and pull up MarketSmith here. I'm going to bring up HBP, minimize it a little bit. Bring in the weekly. So what you can see here in the, it's fitting all in this window. You can see the earnings per share has grown 133, 50, 557, 250% the past 4 quarters. Big sales growth. Like I said, earnings per share is 99, but there's no, estimates for 16 and 17, but there is mutual fund ownership growth, so that is at least there. But overall, it's not perfect, but, it's still a pretty strong overall stock, considering that our final risk on this first one is 371, final one is 361. And then I'm also going to play around with a speculative name. I don't recommend this trade for anyone at all. GSI, it's probably going to be 0.5% of my account capital, not 1%, because I think earnings are on March 30th or March 31st, if this is a 31st month, which I do believe it is, because I'm touching the top of my knuckle. So GSI, I'm going to make that 0.5% of my account capital. Just to play because it's a runner. It's in a lot of day trading chat rooms are mentioning it. It's got a beautiful short-term technical pattern in a group that's doing very well recently, the metals and mining. So I'll go ahead and do 0.5% using my final sell stop at 170 to try to get a major runner just for bragging rights. If it goes up 100%, I can say, hey, at least I owned it. It isn't going to make or break the bank. But GSI, 0.5%. Earnings are coming up. Not a trade I recommend to everybody. The real ones are HBP, 2%, DG, 3%, and Ruth, 5%.